Will I still defend this decision 6 months from now? A long-term perspective on investment decisions. Investment decisions are often made in moments of uncertainty, excitement, or fear. Prices move quickly, news spreads instantly, and emotions can influence judgment. In such moments, a powerful question can help restore perspective. Will I still defend this decision 6 months from now? This question shifts the focus from immediate reactions to long-term reasoning, a key theme in behavioral finance. 1. The problem of short-term thinking. Financial markets operate in real time, but good investment decisions often require long-term thinking. Short-term pressure can cause investors to react to daily price movements, follow temporary trends, abandon previously planned strategies. Psychologists describe a related bias called present bias. When present bias dominates decision-making, investors may prioritize short-term emotional relief instead of long-term value. 2. The value of psychological distance. Asking whether a decision will still make sense in 6 months creates psychological distance from the current moment. This idea is related to construal level theory, developed by Yakov Trope and Nira Lieberman. According to this theory, immediate situations trigger emotional and detailed thinking. Distant perspectives encourage more abstract and rational reasoning. By imagining the future evaluation of a decision, investors often think more strategically. 3. Emotional decisions versus rational decisions. A useful test of investment quality is whether the decision would still make sense without the current emotional context. Decisions driven by emotion often rely on market noise, recent price movements, social pressure. Rational decisions, on the other hand, rely on a defined strategy, long-term goals, risk management. If a decision depends heavily on the current mood of the market, it may be harder to justify later. 4. The 6-month test. The 6-month test is a simple mental exercise used by disciplined investors. Before acting, imagine explaining your decision to yourself half a year later. Ask questions like, will the reasoning behind this decision still make sense? Was the decision based on analysis or emotion? Did it align with my long-term investment strategy? This reflection often reveals whether a decision is impulsive or thoughtful. 5. The role of decision quality. An important insight in investing is that good decisions do not always produce good outcomes, and bad decisions sometimes appear successful. Therefore, the key question is not only what happened, but also how the decision was made. A decision that remains defensible over time usually has clear reasoning, realistic expectations, alignment with long-term objectives. Final insight. Markets change quickly, but thoughtful decisions tend to remain valid over time. By asking, will I still defend this decision 6 months from now? Investors create a pause between emotion and action. Sometimes that pause is the difference between a reaction and a well-considered strategy.